My name is Paul Cozza, and I'm the Managing Director of Portfolio Operations at Corsair Infrastructure. Corsair Infrastructure focuses primarily on transportation infrastructure sector and its adjacencies. We presently invest through three platform companies operating within the sectors of airports, roads, and port verticals. Our infra businesses are located in the Americas, Europe, and Australasia. Globally, we witnessed a confluence of unprecedented events in the supply chain these last few years. Our supply chain's robust, but it's also built around historic peaks and valleys. The COVID pandemic created wild swings in demand and operations we have not seen before. First, we had to shut down a business. For about 2 weeks globally, no business moved. And then we saw this huge, unexpected surge in transportation. Simultaneously, there was also a shift to e-commerce that we have not seen before. Then we also had COVID-related worker challenges. Safety protocols created operating challenges, lack of personnel due to illnesses, safe distancing, cleaning protocols, extra testing was all put in place. And this all created extreme challenges to companies' operations. And this happened throughout the supply chain. Also, we saw a war in Ukraine. That suspended routes throughout the Black Sea. It stopped the Ukraine as a supplier of parts. And also Russia sanctions were added globally, which increased inventory issues. The results from all this was a disjointed global logistics. Container vessels were out of sequencing. We saw huge bunching at ports. On-time performance were at all-time lows in all areas of transportation. Equipment was not positioned correctly. Trains were off schedule. Air cargo was off schedule. Ultimately, what happened is this led to congestion. Seaports, import distribution centers, fulfillment centers, warehouses, all got congested. And what resulted was ultimately shortage on our shelves, shortage on unavailability of key products, and manufacturer suppliers having issues. We also saw a much longer wait time for deliveries, and ultimately, it was frustrated consumers. We see all opportunities. Smart companies have already evaluated their supply chain and making changes. They're making capital investments into better IT systems, improved visibility of cargo. Cargo availability and visibility is the holy grail for logistics. And only good investment in top-of-the-line IT systems will make it happen. We're also seeing companies reduce redundancies and risk avoidance like we've never seen before. Companies are choosing multiple suppliers as opposed to having maybe one or two suppliers. They're looking at multiple routes for moving their transportation cargo, more than we've ever seen before. Redundancy of key equipment, where in the past maybe certain companies would have only minimal equipment, now they're looking at having more equipment just to have backups in case of maintenance issues. Larger inventory of spares for repairs and maintenance, more than we've ever seen before. And also there's a broader use of different carriers and modes of transportation. All of this is to improve the portfolio mix and to reduce risk. In the past, manufacturers used to talk about just-in-time manufacturing. Now they're all talking about just-in-case manufacturing. What that means is, we took for granted a lot of the vulnerabilities of our global supply chain. Low inventories was kind of the key thing to do in the past. It was smart financially. However, companies saw during this time that could also come out and haunt you if you don't have enough inventory for your stores. Companies use limited routes to route their cargo globally, and that changed also to create redundancies and backups in case of global events. And whereas some companies maybe had singular sourcing for different products and certain countries, they're expanding that much more rapidly to make sure that they have a backup. Where we used to concentrate just solely on price and cost, we're seeing much more in the global supply chain of focusing on service levels and performance like never before. We also have heard a lot about this reshoring, a lot of talk of that in the papers. I'd like to categorize it more as less dependence. What I mean by that is the small amount of suppliers that used to be used, companies are also putting in place maybe a domestic supplier so they don't have to to deal with international complexities. Where they used to use maybe longer international routes, use a domestic supplier as well for some of that help. And or if you're dealing with domestic companies, you don't have to deal with some of the international health and labor rules that come into place. All of this ultimately, though, is to lessen portfolio risk and make a supply chain more secure for the long term. Ports, especially in the US, got a lot of bad media. Some of it was fair, some of it was unfair. The ports became the most visible bottleneck. We saw a lot of this in the media. Ships kept bringing in cargo, and getting the cargo out of the port was the challenge. We saw a lot of pictures of ships waiting at sea, Southern California with ships waiting out for Long Beach or at LA. Ports congested with containers. We never heard so much in the last 2 years about the words of supply chain or international logistics like we've heard recently. Ultimately, it was the evacuation of cargo at the port that was the challenge. Bottlenecks occurred in the international and internodal nodes. Not enough trucking capacity due to maybe not enough trucks or truckers availability. Rail capacity issues, rail yard congestion. Distribution centers couldn't accept any more cargo because they were full, because they couldn't get the equipment and the personnel to distribute them to their stores. That also caused then increased cargo sitting in containers or in trailers and lack of chassis availability. All of this turned into the ultimate visible bottleneck being our ports. Fortunately, recently we're doing much better. Ships waiting out at sea or in line is not as much of an issue recently. More vessels are on schedule. We're not seeing the bunching that occurred in the last years. And we're also seeing a little bit of cargo diminishing, especially in Europe and in the US. The replenishment of equipment, maintenance, and increased capacity that took place during COVID is now really starting to pay off for our international supply chain. We have our business, DP World Australia. In that business, we're in partnership with Dubai Ports World, who's a leader in global ports logistics. And our company, fortunately, did very well. In Australia, we operate 4 ocean ports. We move greater than 3 million TEUs of cargo annually. That's 20-foot equivalent units, or think of it as containers. We have greater than a 40% market share in Australia. And our company there also provides shoreside logistics, and we're looking at expanding in that area. Fortunately, our company did very well. We maintained a strong level of operations during the pandemic. We had minimal port congestion. And most importantly, we also maintained a safe environment for our employees to work. How were we able to do this? Well, first of all, we had and continue to have a strong management team in place with a high level of service. We saw during this time that the weak companies got weaker and the strong companies got stronger. And fortunately, our business there was strong, and we continue to see the payoff of that investment. Our smart investments in infrastructure for our DP Australia business made a lot of sense and paid off. We also had a customer-first attitude with high levels of service before the pandemic, which really showed itself during the pandemic and after. Corsair Infrastructure, we work closely with management and our partners to monitor operations and performance. We collaborate with our platform companies. We actively engage management. We identify efficiencies and improvements. We also invest in people and equipment, all to improve yield and returns for our investors. We are far from a passive investor in the businesses that we own. Our model at Corsair is to bring strong operational and commercial knowledge to our investments. I myself have over 30 years of global logistics and transportation experience. I've worked in all modes of transportation: sea, air, land, warehouse, and logistics. I work well with the CEO and the C-suite, and ultimately we get results. We think things are really looking much brighter. Most of the port congestion is gone. Infrastructure investments implemented during the pandemic are all coming online and helping the global infrastructure in ports. Global supply chain is becoming much more normalized as we've seen in the past. There are uncertainties ahead. There's question of the global economy, The European economy and also the US is slowing. China COVID lockdowns continue to be an issue. They've lessened in the last week. However, we'll see what happens over the coming months. China is a key part of supply for the global supply chain. And we still have war in the Ukraine, and there's other geopolitical risks. In the US West Coast, we also have port labor that could become an issue as the year continues. However, at the same time, we continue to be bullish. Global trade, we think, is going to continue to prosper. We have a connected world. We see that happening economically into the future. The efficiencies of global procurement production, we think, will continue and continue to improve. And we also think we'll see a continuing improvement in the state of international logistics.